As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICAN member, it'll just take one exam. That's all it takes to complete the globally recognized CIMA professional qualification and the internationally respected CGMA designation. As a CIMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICAN member, you can directly sit for the final exam of the CIMA Professional Qualification, the Strategic Case Study exam. Start studying the CIMA Professional Qualification. Prepare to make an impact.
Good evening, distinguished ladies and gentlemen, and it's a great day today because it's the first day in the month of February 2024. Aren't we lucky to be alive today? Today we'll be discussing something fundamental, something it's not germane, right? But it's very interesting for every one of us, accountants and even non-accountants. If I may put a background to this, I would say we all hear about the International Financial Reporting Standard, which is the IFRS, which is a set of accounting rules for the financial statements of public companies and even private that are intended to make them consistent. We try to make it transparent for everyone to see, and it's a worldwide approach. IFRS, like you all know, has currently been competing with other very financial standard across the world, and you would attest to the fact that it is in European countries we all practice. Even in Nigeria, we have taken it to the next level. And IFRS is issued by the International Accounting Standard Board, and the system is sometimes people confuse it with IAS, which is the International Accounting Standard. But you all know that is old fashion by now. I'll say once again, good evening, distinguished colleagues, friends of the Institute of Chartered Accountants of Nigeria. Today's topic is different because that is why ICAN on Air comes to us at our own convenient places. IFRS 17 is the topic for today. What is it about the implementation? What is it about the challenges, the expectations? And to do justice to that topic today, we have our special guest in the house. His name is Dr. Chinedu Uchechukwu, FCA. He is a senior manager, financial reporting group of Ernst & Young. And I'll bring in after this introduction. So we'll go on a commercial break and we'll be right back. I have something different to tell us, and it's all about the accounting profession, what we've been doing. But we'll go on a break and then we'll be right back.
Security is key to national development and growth. No nation can be truly economically successful without peace and stability, or when its security is threatened. This is why we must perform our civic obligation of duly paying our taxes so as to provide the needed resources for government to secure our lives and properties. When we pay our taxes, government is provided with the needed resources to equip our security agencies for a safer Nigeria. The money we pay as taxes is used to purchase equipment and hardware, invest in intelligence and other sophisticated technology, as well as cater for the welfare of all security personnel. A secure nation is a prosperous nation. Nigeria is safer when we pay our taxes. FIRS, it pays to pay your tax.
You're welcome back. It's still ICAN on Air, and my name remains Funmi Olani, ACA. Today's topic is IFRS 17 implementation. What are the challenges and what are the expectations? And before the break, I mentioned that we have Dr. Chinedu Uchechukwu in the house to provide justice to that topic. I'd like to read his profile very briefly. Dr. Chinedu is a senior manager in the assurance service line at Ernst & Young, where he leads the financial reporting group in West Africa. He is also responsible for the IFRS decks and the technical consultations for the FR group and the professional practice group in West Africa. He has over 10 years of proven experience in assurance and audit services, and his academic qualifications are BSc Accounting, Madonna University, MSc Accounting, University of Nigeria, PhD Accounting, University of Nigeria. He is a chartered accountant who is passionate about learning and development and has facilitated different development session and training in IFRS and other technical topics within and outside the firm. He is also a professional and an academic researcher with interest in IFRS and contemporary issues in accounting and finance. Please do welcome into the studio Dr. Chinedu Uchechukwu. You're welcome, sir.
Thank you so much for me. Thank you for having me.
Yes, before we went live, I mentioned to you that we've been at the Western Zonal Conference, which is the 18th Western Zonal Conference in Ibadan, and it's been exciting. There's been lots of people. There are lots of topics around the same IFRS and even what the accountants should do. And the theme of the conference is economic resilience, navigating the bottlenecks. And I know that as based on our discussion before we came on board, that it was packed full. There were lots of resource people. And Dr. Chinedu, I believe that you understand what ICAN is doing to make the Institute a better place for every one of us, right?
Yes, absolutely. Absolutely.
Thank you so much. And it's been great talking to you even before the program, and I see the depth. So for me, there's a lot going on in the financial reporting ecosystem, and IFRS 17, it happens to be one of them. What would you say IFRS 17 is all about, sir?
Yeah, thank you so much for me. So I agree with you. There's actually a lot going on in the financial reporting ecosystem, especially in Nigeria. Reporting entities have to do with ISSB sustainability standards, implementation of internal control over financial reporting, and all these changes seem to be coming through between 2023 and 2024. So IFRS 17 happens to be one of them that is impacting entities that issue insurance contracts. And when we talk about IFRS 17, which is International Financial Reporting Standard 17, we're referring to the standard that was issued by IASB, and the standard was issued in May 2017. And the standard tries to provide guideline on the basis for recognition, measurement, presentation, and disclosure of insurance contracts in the financial statements. And the standard applies to entities that issue insurance contracts, including reinsurance contracts. And you will see that I'm particular about the scope. I'm not saying the standard applies to only insurance companies, right? So the standard applies to entities that issue any kind of contract that meets the definition of insurance contracts. So the standard may even apply to non-insurance companies. And the standard equally applies to reinsurance contracts that's an insurance contract an insurance company may hold, right? And then, of course, investment contracts with discretionary participation features, provided that those entities that issue participation features type of instruments equally issue insurance contracts. And like I mentioned earlier, IFRS 17 is bringing a lot of changes. It has made far-reaching, in fact, it has far-reaching implications for insurance entities. What we are seeing in the standard is that it aims to provide enhanced disclosures. Entities that will be applying IFRS 17 would achieve greater transparency in their reporting. We're going to see a more consistent approach in reporting insurance contracts for entities that issue insurance contracts globally, right? And the standard is also going to reduce diverse practice, which we had in the previous IFRS 4. The previous IFRS 4 introduced a lot of diverse practices, but with this IFRS 17, those diverse practices are going to significantly be reduced.
You can see the depth. Thank you so much. You mentioned the previous standard. What would you say about that? The previous standard for insurance.
Okay. Yeah. So when we talk about this previous standard, that's IFRS 4, which we are using before. IFRS 4 allowed entities to select accounting policies, and those accounting policies that they're able to use IS 8, to determine the way and manner in which they want to recognize revenue from premiums they receive, from policy holders, right? Now, what IFRS 17 has done is to try to harmonize, that approach. It has introduced a more consistent approach, in the recognition of that revenue. And that makes it to be more consistent, and it also enhances comparability. In fact, with IFRS 17 now, you can compare the financial statement of an insurance entity in Nigeria with the financial statement of an insurance entity in other place in the world, provided that other entity is using IFRS 17, which was not the same thing when we had IFRS 4. IFRS 4 had a lot of diverse practices, and it has received a lot of criticisms from practitioners. And of course, IFRS 17 introduced some measurement models we now have this time around. We have the one we call general measurement model, premium allocation approach, and then of course, variable fee approach. So all these changes are what we are seeing coming through, the new standard, IFRS 17. Yeah.
Yeah. You mentioned the recognition of revenue, but how did IFRS 17 really impact that recognition of revenue and of profits for insurance?
So I'm going to answer this from the primary standard we have for revenue recognition, which is IFRS 15. And what IFRS 15 did was it tied revenue recognition to performance obligation. In IFRS 15 introduced what we call 5-step model. And using that approach, an entity is able to recognize revenue when it has satisfied the performance obligation, right? Now, what IFRS 17 has done is to also issue a standard that is consistent with what we have in IFRS 15. And this also means that IASB have always been consistent in their approach. So revenue recognition, in line with IFRS 17, is tied to performance obligation. Unlike what we had before, where entities could just select accounting policy, when they receive premium, they can just recognize the entire premium as revenue under IFRS 4. But it's no longer like that now. In the new IFRS 17, as insurance entities are rendering services, they recognize revenue, and any portion that has not yet been earned would be expected to be deferred by calculating what we call contractual service margin. So revenue recognition is tied to performance obligation, and you will agree with me that this is really going to impact the profit recognition, right? Because the profits that those entities would have recognized, in the previous standard will significantly differ from the profits they would have this period that they're using IFRS 17.
Okay, so if I may ask, as a layman would always ask, how is IFRS 17 expected to really impact the financial reporting in the insurance industry? You've said so much, but you need to break it down in a way that I can understand the impacts on the financial reporting of such industry?
So let me start with transparency, right? Let me start with transparency. So an entity in the previous standard will receive premium and they recognize that as revenue, right? When they have not yet satisfied the performance obligation. That's not a transparent way of reporting. Now, what we are seeing in IFRS 17 is that using IFRS 17, investors, stakeholders would be able to relate more. They will have more comparable information from the financial statement. They will be able to understand, from investors' perspective, they will be able to understand the actual profit this entity has made in a given period. And they will be able to also understand the financial position of the insurance company. What is actually the liability that is remaining, for the remaining period or remaining coverage of the contract? So they would be able to understand those liabilities and know what an entity is carrying as liability and what an entity is carrying as insurance contract. So from that perspective, one can really say that the impact in financial reporting is that there would be increased transparency in reporting, and then it will also enhance comparability. One can comfortably compare the financial statement of one entity with the financial statement of another entity, as I mentioned earlier. Yeah.
Okay. All right. So it's clearer now, even for the layman. So this ICAN on Air is not only restricted to chartered accountants. Please tell a friend to join. If you work in the insurance sector, you need to join because you need to report it the right way. So can insurers expect any operational benefit from implementing this IFRS 17?
Yeah, sure. So, while implementing IFRS 17 poses significant challenges, everyone knows that, no doubt. Starting from the issue of sourcing for data, changing IT systems, even resources. I mean, the requirements for actuarial valuers. There's just a whole lot, right? So, looking at it from that perspective, one may think that this is really going to be challenging, and I will agree that it's going to be challenging, just like any other change management system. So whenever you're introducing something for the first time, the change process is usually difficult, right? But then you can also think about it. Think of it from the perspective that an entity would also enjoy certain operational benefits. For example, they strive to improve data quality. All right. So what this means is that insurance companies would be able to have very good data about their insurance portfolios, about their insurance contracts. They will be able to configure their system in such a manner that it has to meet the requirements of IFRS 17. And this improves their governance process. And then the one that actually interests me more is the fact that because IFRS 17 is all about, insurance business is all about managing risk, right? And IFRS 17 helps entities to determine profit from each insurance contract on a portfolio basis. So that way, entities are able to really, allocate profit to each portfolio of contracts, and they can comfortably determine which portfolio of contract is doing well and which portfolio of contracts, insurance contracts, are not doing well. So the ones that are doing well, they would be able to, take more strategic decisions to make them better. And the ones that are not doing well, right? The portfolios that would probably result to a loss, which IFRS 17 requires that for those kind of portfolios, once they have resulted to a loss, that the loss should be recognized immediately. So for those type of portfolios, insurance companies would be able to really understand that they need to either design or redesign the policy, the insurance policy, or determine a better pricing for the market to help them to, be able to make profit for those kind of products. So like I mentioned earlier, it would really improve risk management and help entities, especially from strategic perspective, to make better decisions.
Thank you so much. Yes, thank you very much. We're still with Dr. Chinedu Uchechukwu and is discussing the IFRS 17 implementation challenges and everything around it. I'd like to recognize some of our audience here today. Stephen Offo from Calabar, we say thank you so much for joining. Tijani Ahmed, thank you so much for joining. We also see Rufus Ajaybe from Lagos, Arewa Ajayi. She says she's happy to be here today. Tochuku Gloria Okafor, thank you so much for being here. Augustine Nkili, Fagbolate Mitokwe Adeni says good evening to the amazing people of this noble profession. It's nice to be here again from the ancient city of Ibadan. Yes, that's where we all are presently. Folashade Janet Fakorede, thank you for joining from Ikeja. And we see Ayola Olua Busayo, Uche Marizu, we say Tanko Ibrahim, Adewoyin Benga, Alec Nex, and Titi Layo Akonji. Unfortunately, I can't call all of you out, but of course, we recognize you and we say thank you so much for always being a part of ICAN on Air. So back to you, Dr. Chinedu. Does IFRS, for example, does you only apply to insurance entities, or can other entities apply IFRS as well?
Okay, so you mean IFRS 17, right?
17 itself, yes.
Yeah, okay. Yeah, I think I mentioned this earlier. Yes, the standard focuses on insurance contracts. The standard focuses on insurance contracts. And insurance contracts, we are simply looking at a contract where a party accepts to indemnify another party, when there is a loss event, right? So the party, which is the insurance entity now that's issuing the insurance contract, accepts significant insurance risk. So that significant insurance risk is really important. And any insurance contract that creates significant insurance risk is expected that IFRS 17 should be applied for those type of contracts. Yes, I agree that this is primarily impacting on insurance companies because they are the entities that issue insurance contracts, and they are the main entities that are in this business of insurance, right? So it's really going to be impacting them primarily, but that does not mean that other entities will not also be impacted. For example, a manufacturing company, that or even an entity that deals in merchandise goods may sell some goods, and when they sell those goods, they may sell, a kind of insurance contract, to their customer as well. So IFRS 17 does not apply to warranty provisions, right? But it may apply to certain insurance contracts. So let me give you an example. You may want to buy a phone, a mobile phone, or a television, and they sell insurance for the screen. That insurance for the screen, which you have to pay a particular premium to subscribe to that insurance. If it meets all the criteria specified in the IFRS 17, all right, it could actually come into the scope of IFRS 17. There are some banks that also issue some type of contracts that have significant insurance risks. So for those type of entities, they will definitely be applying IFRS 17. So like I mentioned earlier, yeah, IFRS 17 does not apply, to some insurance-like agreements, like warranty agreements, like residual value. When you go into a lease agreement, at times you may have a lease agreement that will structure that you should have a residual value at the end of the lease contract, right? So for those kind of residual value guaranteed, it is not within the scope of IFRS 17, and it's not going to be accounted for as an insurance contract. That will be within the scope of, IFRS 16 for leases, right? So there are some contracts that are scoped out. But like I mentioned, the main thing that one have to really consider is there significant insurance risk? And once there is significant insurance risk, which exposes the issuer to the fact that he is accepting the risk, and the issuer have to settle or indemnify the policyholder at the end of the day, then that qualifies as insurance contracts, and that should be accounted for within the scope of IFRS 17. So perhaps my advice for entities would be for them to carry out assessment. Don't just say it does not impact you. No, you need to carry out that assessment to determine the level of impact. If you do not issue in the contracts that meet the definition of insurance contract, that's fine. But if you meet that requirement, then it will be appropriate that IFRS 17 should be applied.
Yes, so you heard it from Dr. Chinedu. You don't have to feature only in the industry, in the insurance industry. You can actually use the IFRS 17 in whatever field you find yourself. And I can see OX here saying, can't wait to hear from Dr. Chinedu on this very important standard. Yes, so this is live and direct. Dr. Chinedu is speaking to us on this subject matter. So if you still have questions, please feel free to send your questions, and Dr. Chinedu will be right here to take all the questions that you have on today's program. When you were talking earlier, you mentioned the contractual service margin. What is contractual service margin in IFRS 17, and how is it calculated?
Okay, so I'm just going to try to break it down very well to perhaps layman's understanding, right? So it is simply a portion of revenue, or a portion of profits that you are not recognizing yet, is unearned revenue. So just the way we have deferred revenue in IAS 20, the way we have contract liability in IFRS 15. So it's a portion of revenue that you're not recognizing yet. And the way it's calculated is simply to determine the present value of all the estimated future cash inflows, and then deduct that from the present value of all the estimated future cash outflows, all right, including risk adjustment, right? So once an entity calculates that CSM, which is contractual service margin, will be amortized, over the remaining life of the insurance contracts, right? And then it will be recognized gradually in profit or loss as the services are delivered, or rather as the services are rendered by the insurance company. It's also important for me to mention that contractual service margin, when calculated, cannot be negative, right? So if the calculation, results to a negative result, so what that means is that the insurance contract, that particular contract, is going to be a loss-making contract. And just the same way we have it in IS 37 for onerous contracts, IS 37 requires that once an entity has a contract that is a loss-making contract or has turned onerous, that loss should be calculated and recognized in profit or loss immediately. So we have the same requirement in IFRS 17, and this is a prudence approach. And that's to tell you that IASB have always been consistent, right? So any kind of insurance contract, after the contractual service margin have been calculated and it results to negative, it means that the outcome is going to be a loss, and that should be recognized in the statement of profit or loss immediately. There is no need to wait further. So it's a prudence approach.
Okay, thank you for shedding more light on that. And another thing I would like to take it away from IFRS 17, perhaps just to shed more light on this fact. When you look at IFRS 9, which was issued previously, there were two measurement models that came with it. There's the simple, and also there's a general approach. Do we have a similar requirement in IFRS 17? Or perhaps I should say, what are the measurement models that are required by IFRS 17 in itself?
Oh, okay. So, in IFRS 9, IFRS 9 provides two measurement models for the estimation of expected credit loss. So we have the general approach, just like you mentioned, and we also have simplified approach. The general approach is the one that applies to every financial instrument, but the simplified approach is for instruments that are 12 months. The maturity period of the instrument is less than 12 months, right? Now, that same requirement, because the reason IFRS 9 introduced simplified approach is that some type of financial instruments like trade receivables, it will be complex to start estimating expected credit loss using general approach for them. So the simplified approach is more of a relief for practitioners so that they can have a better approach, that will suit them. Now, we have a similar requirement in IFRS 17, and that's why I say that ISB have always been consistent in its approach, right? So in IFRS 17, we have the general measurement model. Now, this general measurement model is the primary measurement model of, for IFRS 17, and is known as the building block approach. So the building block approach starts with estimating, contractual cash flows, all right, estimated future cash flows. You estimate estimated future cash flows and then adjust them for time value of money, and also adjust for the financial risks, and non-financial risks as well. So we adjust for we adjust for non-financial risks, right? To determine the contractual service margin using the general measurement model. Now, that complex is difficult. I mean, that procedure is complex, is difficult to calculate when you're using general measurement model. It's a bit complex, and if you're applying that for an insurance contract that have just 12 months period, that could sound, it could be so cumbersome for reporting entities. And that's why IFRS 17 introduced premium allocation approach. So premium allocation approach is the second method, and that second method applies to insurance contracts that are within 12 months. IFRS 17 also states that if you are expecting any calculation with premium allocation approach not to be significantly different from general measurement model, then you can use premium allocation approach. Then we have the third one, which is variable fee approach. It's not really applicable in Nigeria. Even if it's applicable to just be few entities, and that's because variable fee approach applies to insurance contracts that have direct participation features, and we don't have those type of contracts in Nigeria. And when I mean direct participation features, when I say direct participation features, I'm referring to the type of insurance contracts that allow policyholders to enjoy from the returns from the investment of those insurance assets, for the investment of pool of funds that have been gathered by insurance companies, right? So variable fee approach is the method we use to calculate for contracts that have direct participation features. And like I said, we don't really have those type of contracts in Nigeria, but you get to see them in western part of the world, right? Yeah. Thank you.
Thank you so much. It's still ICAN on Air. Today, the first day in the month of February 2024, and we're discussing IFRS 17 implementation. Dr. Chinedu Uchechukwu has been doing justice to that topic, and I know that we have been writing, we have been jotting, but please get your questions across and we will take them all in as soon as we receive them. So, Dr. Chinedu, it is understood that, IFRS 9 that you have mentioned, the financial instrument, was not previously mandatory for insurance entities. But, now IFRS 17 has been issued, and will those reported entities have to, or the reported entities that did not adopt IFRS 9 now, would they have to adopt IFRS 17, or would they have two standards that they have to adopt, which is IFRS 9 and IFRS 17? It's a bit confusing.
Yeah. So yeah, I get what you're saying. So when IFRS 9 was issued, insurance, the standard for insurance, contracts, that is IFRS 17, was still a project then, right? That standard had not been finalized. What we were using then was IFRS 4, and IFRS 4 was just like a placeholder standard, right? So it was not the final standard. So IFRS 17 was always going to be the final pronouncement. So because of that, insurance entities were, allowed to optionally decide not to apply IFRS 9. So other entities, financial institutions, all applied IFRS 9. Other entities have adopted and implemented IFRS 9. But insurance companies were allowed not to adopt. Even if you want to adopt, it's not going to be mandatory. So it's optional, right? But this time around, that the IFRS 17 has been finalized and they are to adopt IFRS 17, they are expected to equally adopt IFRS 9. So IFRS 9 becomes mandatory for those insurance entities this time around. It's important to mention that, for us here in Nigeria, I'm aware that most insurance companies actually adopted IFRS 9 before now. So for them, it's not going to be double work. It's just going to be single work. They will focus on only IFRS 17. But for a few entities or some entities that may not have adopted IFRS 9 before now, it's going to be a lot of work, because what it means is that they will be dealing with changing their systems to be able to report in accordance with IFRS 17. And at the same time, they're equally dealing with the transitional requirements of IFRS 9. So it's really a lot of work for them, because at the transition date, they will have two adjustments, adjustments that relate to the adoption of IFRS 17, and then adjustments that relate to implementation of IFRS 9. So it's really going to be a lot of work for them. And for those type of entities, my advice is that I believe that they would have started already before now. But if they don't start, it's important that they start immediately to prepare towards that. Yeah. Thank you.
Security is key to national development and growth. No nation can be truly economically successful without peace and stability, or when its security is threatened. This is why we must perform our civic obligation of duly paying our taxes so as to provide the needed resources for government to secure our lives and properties. When we pay our taxes, government is provided with the needed resources to equip our security agencies for a safer Nigeria. The money we pay as taxes is used to purchase equipment and hardware, invest in intelligence and other sophisticated technology, as well as cater for the welfare of all security personnel. A secure nation is a prosperous nation. Nigeria is safer when we pay our taxes. IFRS, it pays to pay your tax.
The Executive Committee of the Institute of Chartered Accountants of Nigeria invites you to London for its 11th International Conference to be held at the Hilton Kensington Hotel from the 13th to the 16th of March, 2024. Themed: Cross-Border Integration for Economic Resilience, to be delivered by seasoned speakers who are subject matter experts with global renown. Conference will explore, amongst other topics, micro and macro factors necessitating cross-border integration, how international financial systems facilitates cross-border integration, artificial intelligence, and of course the role of the professional accountant. Conference highlights include special address by the 59th President of the Institute, plenary sessions, interactive sessions, and networking opportunities with UK domiciled professional bodies and professional colleagues from across the world. A guided visit of a famous London landmark and a visit to Westfield London White City, the largest shopping and leisure destination in Europe. Conference resident delegates get a VIP pass with exclusive access and offers up to 25% discount on high-end brands. Make your reservations now by sending an email to conference@icon-org.uk for more information. London awaits you. Plan, prepare, be there. ICAN UK Conference 2024.
All right, it's still ICAN on Air today, and we're discussing IFRS 17. We've been discussing it about what it takes to implement IFRS 17 as an insurance company, and even other companies that are not within the insurance sector. And Dr. Chinedu has been assisting us with understanding all of this. We call them technical words, and how you can implement it successfully within your organization. Thank you once again for even accepting to be here today to educate us, Dr. Chinedu.
Thank you. Thank you so much for me. I'm happy to be here.
All right. Yes, we have some questions from the audience, and I would like to take one of them, or perhaps we can come back to it. But I have an interesting question from the audience. But before that, I would like to ask you, Dr. Chinedu, transitional provision is one area of reporting entities deal while adopting a new standard. But what are the transitional provisions in IFRS 17, and what is expected? What is the
Hi, before me, I think I'm losing you.
Okay, did you get my questions right? Do you want me to repeat it?
Please repeat. Yes, please repeat.
Okay, so I was talking about the transitional provisions, which is an area of reporting entities deal, when they adopt a new standard. I said, what are the transitional provisions in IFRS 17, and what is the expected impact in the financial statements of every organization?
Okay, yeah. So when we talk about transition, I think reporting entities normally, struggle with determining the transition dates. They tend to confuse it with the year of adoption, right? So the transition date is mainly determined in accordance with IS 8, which provides the transition date for a new standard of anytime an entity is changing accounting policy, of which this standard is almost like changing accounting policy, because we are moving from a previous standard to a new standard. The transition date ought to be, beginning of the earliest comparative period. So the standard becomes effective from 1st January 2023. And what that means is that we'll see IFRS 17 numbers for the first time in the financial statement for 31st December 2023, right? And what that means is that the comparative period is going to be 31st December 2022. Then beginning of the earliest comparative period is going to be 1st January 2022. So that means while the 1st January 2023, or the financial year for 2023, is the year of adoption, all right, then the year of transition, or transition date, is going to be 1st January 2022, which is the same as 31st December 2021. And what that means is that the opening balance of retained earnings will be adjusted as at 1st January 2022. Then entities will be expected to present 3 sets of statement of financial position. There is 3 columns, right? So they're going to be presenting the column for, 31st December 2023, 31st December 2022, and 31st December 2021. Entities will have to present that. And then the approach, IFRS 17 provides 3 approaches. One, what we call full retrospective approach. We'll also have modified retrospective approach, which is supposed to be applied when full retrospective approach is impractical. If it is impracticable for a group of insurance contracts, if it's impracticable for an insurance company to apply to apply the full retrospective approach on a group of insurance contracts, right? They use modified retrospective approach. And if it is not possible, or if it is still impracticable for an insurance company to use full retrospective approach or modified retrospective approach, then they can use fair value approach, which is basically means that they would have to, determine the fair value of the numbers in the financial statements. Now, IFRS 17 places more preference on full retrospective approach, because what entities may do is that they feel that fair value approach is easier to use, so they will just want to use fair value approach for all their portfolios of contracts. No, IFRS 17 does not permit that. IFRS 17 requires that an entity will have to consider full retrospective approach first. It is only where it is not practicable that they can move to modified retrospective approach. So it's that in order of that hierarchy: full retrospective approach first, then modified retrospective approach, and then the last one is fair value approach. And the assessment to which of them that should be used should be done on a portfolio by portfolio basis. It's not at entity level. So don't just decide that you want to use fair value approach for all your contracts. No, what you have to determine is that you have to group your insurance contracts per portfolio, right? And then use this approach, determine the appropriate approach to use for each of those portfolios of your insurance contracts. Thank you.
Well said. Thank you very much. Yes, we have a question here from Tochuku Gloria. Is it a question or just a remark? It says, Dr. Chinedu, you are really doing justice to the topic. I have no regrets partaking in this interactive session. And say thank you very much, Fumi. Thank you for the wonderful coordination. We say thank you. I mean, without you, there will be no ICAN on air. And I would also say thank you to Dr. Chinedu for providing justice to all of these questions as it comes to you. So we can take in more questions. Remember, it's ICAN on air, and we're here for you. It's a 1-hour program, and we'll dissect all the topics that interest you. So, Dr. Chinedu, I have someone else here. Boderi Owolabi, he said, can we apply IFRS 17 on construction companies in determining the revenue?
Oh, no. So for construction companies, construction contracts are within the scope of IFRS 15. It was previously IS 11 and IS 18, but the two standards have now been collapsed together to form IFRS 15, which is revenue from contracts from customers. So that is the standard we should apply for construction contracts, and not IFRS 17 for determining revenue.
Okay, thank you so much. I mean, I'm seeing a lot of people's remarks here and comments. I see Ajayi, Oladipupo Olushola from Megbeda, everyone saying thank you so much to you, Dr. Chinedu. They're actually having an exciting time with you here. I bet that the topic resonates with a lot of people, and because it's fresh, so everyone is trying to understand better what this is all about. So I will also like to ask you, sir, how will the adoption of IFRS 17 impact the business model of insurance companies, especially in Nigeria? And would it impact the nature and the structure of the insurance contracts?
Yes. Like I mentioned, introduction of IFRS 17 represents substantial change for insurance companies, and indeed it could, influence certain aspects of their business model. In terms of product design and pricing, you will recall that I mentioned earlier that before, entities may just go ahead and recognize premium received in the financial statements, without classifying insurance contracts per portfolio or according to risks, and then try to determine the profits or try to streamline the profits that the contracts within that portfolio are generating. Now, when they are using IFRS 17, it would be easier to drill down to the performance of each portfolio, right? And if they drill down to the performance of each portfolio, they would be able to determine which portfolio is making profit and which portfolio is not making profit. And that way, entities may have to really consider adjusting product features and fee structures, to optimize the recognition of profits under this new standard. Because if they restructure the products or their policies, and also have a better pricing for the market, what that means is that they would be able to price better, because if the claims and expenses from insurance is exceeding the premium you are supposed to collect, you know that what that means is that you should price better to be able to receive better premium. And from financial reporting perspective, of course, we've mentioned that there's going to be a lot of changes, and the entire changes in the financial reporting is going to also be impacting the business model. It will impact the IT systems. It's going to impact governance structure. Everybody in the insurance companies would be affected, both from the finance office to the IT office to the auditor to the accountant to the actuaries. Everybody would be affected. And what that means is that the entire business model of the insurance company is really going to be overhauled just because they want to comply with the requirements of IFRS 17. So I agree that there's going to be a lot of changes, and it's also going to impact the way insurance contracts are structured. Because I don't think there will be any insurance company that would like to structure a contract that will result to a loss-making contract or an onerous contract. And when they use IFRS 17, they will be able to easily determine those type of contracts that are onerous. Yeah.
Interesting. Thank you so much. So will IFRS 17 lead to a change in how the performance of insurance companies is measured? Will comparability be an issue now?
Yeah, so it's going to affect the way profit is measured. It's going to affect the way performance of insurance companies will be measured. Like I mentioned earlier, what they do is, they use premium received, or the IFRS 4 just allows them to determine or select the appropriate accounting policy. But what we've seen most times is that premium received just comprises of what is the insurance revenue. Around is going to change, and it's purely going to be based on satisfying performance obligations. So insurance entities will have to work hard to perform, to render service before they recognize revenue. So it increases more, it enhances transparency, because any number you see in the financial statement, you will just know that, yes, this is revenue that is earned before it was recognized, because they have rendered services, before they go ahead and recognize those revenue. In terms of comparability, I would not say that comparability is going to be an issue. Rather, what I would say is that it's even going to enhance comparability, because in the previous IFRS 4, IS8, I will use IS8. IS8 requires that an entity there's a procedure for selecting accounting policy. So if I'm using IS8, I can select accounting policy and make it as a matter of policy. And this policy changes from entity to entity, from industry to industry, from jurisdiction to jurisdiction. You have different entities making use of different type of reporting framework to recognize revenue. But with IFRS 17, it's going to be consistent. Everybody is using the same measurement basis, to determine their numbers, and that's going to enhance comparability.
Okay,
Thank
all
you.
right. We're running out of time, but I need to ask this, especially because it's related to the regulators. So, how well as the regulators, which the National Insurance Commission, NICOM, how have they supported insurance companies in the adoption of this new standard? And will there be a sanction if perhaps someone violates the rules set down, or if the companies don't do what is in accordance with IFRS 17? And have they truly fully implemented this standard?
Okay, so this is I think today is 1st February, right? By 31st March, insurance entities that are listed will be expected to be reporting unless the NICOM grants a waiver to them. By 30th June, they will also be reporting. And if we don't see any financial statement in the public domain after that, these 2 dates, it means that something may be wrong, right, from regulatory perspective. So for now, we don't know who is adopting and who is not adopting yet. But what I can say is that National Insurance Commission has really been helpful, right? In fact, to ensure a seamless adoption of this IFRS 17, the National Insurance Commission had to, set up an advisory and consultative team referred to as Insurance Industry Financial Reporting Working Group. And this team was set up on 2nd of March, 2020, with the main objective of ensuring that, they set the path, set the roadmap, set the timeline for relevant activities that will help insurance companies to adopt. And the commission did not just end at that. The commission also organized awareness session on IFRS 17 that was attended by the CEOs, directors, CFOs, accountants of these insurance companies. All right. And the awareness session, I would consider it to be successful because it had high level of participation from insurance companies. So I would say that the National Insurance Commission, NICOM, has really been helpful in this project, and they've tried as much as possible to ensure that insurance entities comply. It now remains for us to see the financial statements of the entities that have adopted, and by then we can know whether they have adopted or not. And not just it's not just NICOM that is a regulator here. Financial Reporting Council of Nigeria is also a regulator, and I'm sure that if an entity does not apply a standard, as they should apply, then the Financial Reporting Council of Nigeria may want to bring in their sanctions as well. Yeah. Thank you.
Okay, thank you so much. I mean, we've run out of time, but I'll say yes, you did a great one on all of those questions, and we appreciate you. Just want to say thank you so much, Dr. Chinedu Uchechukwu, for being here today, and we hope that next time when we call you, you'll be very much available to yield to our requests. Thank you so much once again.
Thank you for having me.
All right. So I'd like to take this announcement before we wrap up on the program. We have the MCPD free webinar program on Thursday, the 8th of February, 2024, 10 a.m. to 12 noon. Thriving in Turbulent Time, Practicable Insight of Professionals. It's a 2-credit hour training, and you can reach out to the Institute if you're interested in this. ICAN, in collaboration with Babcock University, Elisha Remo, Ogun State, an African Accounting and Finance Association, is organizing a 9th annual international academic conference on accounting and finance. And the theme is building a viral economy through industrial revolution, technology, advancement, and creativity capacity development. The date is the Tuesday, 13th February to the 15th February 2024, and the venue is Babcock University. So please make it a date there if you want to belong. March 2024 ATS examination will start Tuesday, March 26th to March 27th. We wish you the best of luck. All the same, I would like to say thank you so much. We are right here in Ibadan. We are having the 18th Western Zona Conference with theme Economic Resilience, Navigating the Bottleneck. We've had lots of interesting conversation during the conference. It's not too late to join. You can join virtually, or you can even come to Ibadan to attend physically. Tonight is the happy hour. Accountant like to unwind. So we're getting ready for that at 7 p.m. just right now. Thank you once again, everyone, for being part of today's program. My name remains Fumi Olani, and I say do have a lovely evening. Good night.